The S&P 500 is currently falling after a red session on Friday. In today's video, we gotta get you guys prepared for what's to come. All right, the markets are looking like the bears are taking over essentially. So as y'all see with the title, maybe a stock market crash. Right, there may be. We'll see. Again, my job is to take things week by week. So let's dive into some of the stocks to keep on your watch list now. First and foremost, the Nasdaq. On Friday, the Nasdaq formed something very interesting. A bearish structure, and I was waiting for it to close below a certain level. There, see, this is the 1 hour chart, and there is a bearish pennant on the chart right here, and confirmation was this close, right below the line, right here at 25,686. Right there. So with this, we can expect a drop all the way down. For QQQ, again, same thing, Nasdaq QQQ. You can expect a drop all the way down to at least 605. Like, this is behaving the way it's supposed to behave. I mentioned this in the Discord, that this thing was going to fall over the weekend, and that's what we're seeing right now. And on the weekly chart, let's go back to the futures. On the weekly chart, this is how things are. The bears are fully taking over this market. How low are we going to go? How bad is this going to be? We'll find out. We'll find out. Okay, first level of resistance, first level of support is obviously at 25,000. So when we get there, again, we'll make a new video, an update video to see how much lower it can go. Now, something that I drew with the VIX for y'all is currently playing out at the moment. I drew this thing. I hope the drawings are there. It should be there. I don't think I erased them. Maybe I did. That's unfortunate. Let me see if it's on VIX. Oh, it is on VIX. Okay, so I drew this thing for y'all, I believe, in the middle of January, right? And so far, it's following option number 2. Path number 2, I would say. It didn't go straight up like that to 28. It's following this trajectory. So we'll see how high VIX opens. I think it should open at like 21 or 22. And then if the sell-off intensifies and we see QQQ drop by another 10 points, then we should see the VIX all the way up here to like 28 to retest this level of resistance. Okay, so that's my initial thoughts on the indices. I told y'all this right here on the 4 hour, this entire thing was fake the moment we got back in here. The moment we got back in here, I knew it was fake. Okay, now the stock for tomorrow specifically, because this company is reporting earnings, and I talked about this company before, and I told y'all why I was bearish on it. That company is none other than Palantir, right? So I left all of the analysis on there, and it's still falling. It broke below 160 over here, collapsed on Thursday, and then fell again on Friday below 150. It has earnings coming up, and I gave you my price target on there of 125. The last time I talked about why Dr. Brewery's short position made sense, it was way up here in the beginning of the year. If you check those videos in the first week of 2026, I talked about this extensively. The moment it drops below 170, this thing is going down to 125. And it's slowly fading as we are approaching earnings. And I think earnings is going to take it there. When we look at if we're just going to keep it on here, we're going to zoom in right here. All right, so we got that head and shoulder still in play. Left shoulder, head, and then right shoulder again. And then we got the neckline. And then we got the neckline right over here, which currently we are below it. Currently, right? And then the target is usually down here at 130, but I think it can go just a little bit lower before forming a new structure so that we can fall even lower. All right, but initially, I think that line is going to get tagged. And I think earnings is going to be the reason why we go down there. So keep your eyes out for Palantir. There is an opportunity on there. Obviously, the puts are inflated because earnings is in the way. All right, so again, and also don't gamble through earnings. I know it's very tempting, but try not to gamble through earnings. Now, the next stock that we're going to discuss in today's video is going to be an update on the stock that I told y'all to short in the last video, which was Microsoft. And yeah, I am shorting this thing. I shorted this thing at right here, right at 433, and I'm still holding short. I have puts on there, and I don't want to cover my puts until we get down to here. Very simple stuff. Okay, we got the earnings gap down, or the earnings let down, massive volume, which we like. We closed below that day's close. We're about to open lower inside of the gap, which is good news for the bears. And now that gap is going to act as a magnet, where it's going to continuously pull the price down. And the lower it goes, the more inflated my puts gets. Okay? So, you're bearish on this thing. Y'all should be having puts on there. You're getting paid on there. You're getting paid on there. Everybody's getting paid on Microsoft puts. All right. Now, let's discuss another stock. I also mentioned Apple, about why I was leaning more bearish towards it after earnings. So it had that IV crush. I'm gonna wait for the stock to load. So it had an IV crush, and then it immediately fell, but it didn't really hold that low. It kind of formed a bullish structure, provided the day trading opportunity. And right now, again, the futures are down, so this doesn't surprise me at all. Set an alert right at 252, and then patiently wait for it to ring. It's going to ring. The moment it rings, it's gonna sell off. Yeah, the moment it rings, it's going to really sell off, because there is a gap right here at 247. And the nice thing about Apple is that the contracts are really good, and they added new expiration dates. So there's opportunities for everyone, whether it's Monday or Tuesday, or it doesn't matter, right? Like, it's the ROI on setups that are clean are going to be massive, because they added more expiration dates, which means cheaper contracts, which means more money for traders. All right. So obviously the risk is bigger. If you make the wrong move, you will lose more. But that's why we trade structures. That's why we trade what the market gives us. You don't just trade random stuff, right? Just because you feel like it. It's not how trading is done. Okay. Y'all see me drawing these structures and how everything makes sense. That's how it's supposed to be. Right, and then just like that, again, example again with QQQ, structure, breakdown, target, 610, simple, right? Now, another update, ASTS. Let me go on the 1 minute for this one. Yeah, we got time. ASTS. I'm gonna clean up the chart. All right, so with ASTS, it didn't go to 130, but it did provide an opportunity for longs after the formation of this ascending triangle right here, right? I gave this thing to y'all. It held its own, gave y'all even a great entry at like 117 or 120. On Friday, it had a pop and a fade right here. It popped all the way up to 129.90 essentially, and then started to roll over. So the opportunity to make money was there for both. I wasn't wrong about that, right? And it also, there was an even bigger opportunity for the bears to make money as it faded with the overall market to the downside. Okay, now where's this thing going to go? I believe the run for ASTS is I think the bears are going to take this one down, because this is a clean, and because of the location of where it is, right? And with all that room at the bottom, and I'm also bearish on the overall market. Yeah, I think we're going to fade. That's the only opinion that I have with this one. It's about to open at 107 even. So another one that I mentioned was, I mentioned NBIS, which was playing games for a while, right? So I gave you guys this one right here on the 23rd. It opened higher. It kept opening higher and then going lower, opening higher and then going lower. And it finally cracked below 90. So y'all see the analysis on here, all right? Y'all see it. It's only a matter of when, or not, yeah, when and how fast. If you get these two right, you're gonna get paid the most on the puts, because we know exactly where it's going. It's going down here. Quite simple stuff. We know where it's going. It's just how fast is it gonna get there. So I'm gonna have to move that little circle a little bit more to the right, just like that. Okay. And for anybody who have puts on there, this is my analysis for you. As long as it doesn't creep up again above 90 again, should be good. Watch for potential rebounds and collect your money slowly as it continues to fall. All right, so it's my honest thoughts on all of these stocks, and that is the end of the video. Again, reminder, I am not your financial advisor, so do your own research. Okay, do your own research. Don't forget to follow me on social media right here on Instagram and on X. And lastly, don't forget to like and follow for more.